Welcome to Cyber Shorts, a LinkedIn Live series brought to you by Secureworks. In this series, we talk about snappy topics as it relates to the cybersecurity industry. Today, we're here with Ken Deitz. Ken is our Chief Information Security Officer with Secureworks. Thanks for joining us today, Ken.
Happy to be here.
And Ken, we're here to discuss the new SEC's data breach disclosure rules that just went into effect today for any organization operating in the United States. Organizations now only have 4 working days to disclose any material cyber incidents to the SEC. I think one of the things around this new regulation is the definition around materiality, and there's not a whole lot of clarity on what it means. How do you see this playing out for organizations, and how should they think about the definition and what it means for them?
Thank you. So just to clarify, there are 4 days to report from the time that an organization determines that an incident is material. So there is some time in there to allow analysis and discovery. But however, the SEC is clear that there should be no undue delay in that process but once an organization determines it's material, they have 4 days to disclose it via an 8K filing with the SEC. And as far as what does it mean to actually be material, to have an incident be material is going to be up for interpretation. They are relying on kind of long-standing definitions for financial reporting or anything that they think an investor, a shareholder, would need to know about a company. So if you're if you're going through an incident and you're being impacted by an incident or a series of incidents, if it's determined, if a reasonable person would determine that this is material to any sort of shareholder decision on whether to buy or sell stock, then the SEC is going to want you to err on the side of disclosing that.
And so I think there's going to be a lot that comes with time in terms of how this gets interpreted, how it plays out. But what should organizations think about when they think of the potential impact now of reporting out as it relates to shareholders, investors, stock prices?
So they should be thinking about, of course, what is the impact to the business? How much is it going to cost us to remediate this incident? How much is it going to cost our customers if they're going to be financially impacted by the incident? So there are a series of kind of key quantitative things that they should be looking at. But in addition to that, they should be looking at qualitative efforts. And I think one of the biggest areas, especially for technology companies in the modern day, is going to be reputation. How much is this incident going to impact our reputation, and how much does our reputation for handling data securely, how much does that impact our revenue or our overall business? And that's going to be a key determination for materiality. But I think this is going to cause companies to think real hard about what their reputation in the marketplace is and should be when it comes to security.
And Ken, you talked a little bit about, shareholders, investors. We just talked stock price. We tend to think about larger organizations, but this does apply to organizations of all sizes. The SEC did give smaller organizations a little more time, so their regulations will come into effect later in 2024. How do you think small businesses should think about it maybe a little bit differently, especially this brings to light a new urgency that maybe didn't always exist depending on size and industry they've been in?
Yeah, so that's key. Even if you're a small business, if you have decided to go to the public markets, if you're regulated by the SEC, thinking about what sort of information do your potential investors need to make a good decision on whether to buy or sell stock in your company. And thinking about that as a smaller entity, your materiality threshold is probably going to be a little bit lower than some of the bigger entities, and probably going to be a little bit more sensitive based upon any public information or disclosure on what investors are going to want to see or what decisions they're going to need to make based upon that. So I would think as a smaller organization, you want to think about, what is our reputation really worth, especially as we're just getting started, and how much do we need to be concerned about security issues? And there should be watching pretty closely in the next few months for any sort of disclosures coming out of public companies and seeing how markets react to those.
Well, Ken, thank you for joining us today. I really appreciate the insights that you've shared here with everyone. And anyone that's listening to us today, if you have more interest, we've got some additional content on Secureworks.com just around what the SEC regulations mean and what they are. But also, if you're thinking about building out more of a strong incident response plan so that you can think about how to respond if an incident happens or you find yourself in a breach, don't hesitate to reach out to Secureworks. Thank you, Ken, and thanks for all that tuned in today.
Thank you.